Hello and welcome to this week's Money Roundup, where this week we'll be looking at oil prices and inflation. We'll also be touching on the EU's rejection of Theresa May's Chequers plan.
We start with a look at OPEC. Global oil prices are turbulent and they've been in an upward trend throughout most of this year. There are several factors influencing the oil price. The US production of shale oil has brought on a new supply. OPEC has cut production to push prices higher at times when prices were falling. The value of the dollar has been a factor, and the global demand for oil, particularly in regard to China, has been influential.
Donald Trump's sanctions on Iran, the world's sixth largest producer, has also been a factor. The president has now called on OPEC to get prices down. But despite this, when OPEC met on Sunday, Brent crude climbed above $80 a barrel after OPEC and its allies signalled less urgency to boost output despite US pressure to temper prices.
The level of inflation in the UK unexpectedly rose to 2.7% last week, higher than the consensus estimate of 2.4%. Keep in mind that this is well within the forecast margin for error. Short-term price fluctuations are tricky to predict.
The rise is partly seasonal and possibly temporary, as the components of inflation showing the greatest price strength are transport and recreational goods and services. The Office for National Statistics points out that some of the upward price shifts are likely to subside in the coming months.
The Bank of England's forecast shows inflation falling to 2% by 2020. In terms of interest rate expectations, forecasts suggest the current rate of 0.75% is to remain in the short term, with an initial increase to 1% by the third quarter of next year, heading towards 1.50% in 2020, according to trend data from the Bank of England.
The impact of rising prices with low interest rates is, however, particularly harmful for cash savers. Inflation erodes the real value of money, referred to as purchasing power of money. In simple terms, with inflation, your money won't buy as much today as it would yesterday.
This is why cash ISAs may not be as effective as stocks and shares ISAs.
We end with a brief recap of Theresa May's disappointing visit to Salzburg last week. Her so-called Chequers plan was rejected by the European Union at their summit, and a political impasse is now in place. Theresa May has since produced a stern statement saying that no deal is preferable to rejecting the will of the UK electorate. We'll see what happens next as the story continues to develop, as the deadline for the UK leaving the EU nears its final 6 months.
Thanks for watching. We'll see you next week, and subscribe to the True Potential Investor YouTube channel for our latest Meet the Team and investing jargon videos.